Hey guys, this is Harsha and welcome to Easy Money. So in this video, the topic is futures. Okay, so what I have here is the NSE India website. Okay, and there's something interesting that I just watched when I opened this website. Let's see here. So NSE India. So the Nifty 50 futures, which is actually an index future, was launched on June 2000. Highly liquid, most tracked and efficient index future. So I did not know this. So it was launched on June 12, 2000. Here's the second fact, which is also nice, right? So NSE is yet again the number one derivatives exchange in the world 2020. Awesome. Awesome, right? So here in the NSE India website, I have the NSE indices. So this is where the Nifty 50 is currently trading at a 15,856. Okay, there are other indexes also, the Nifty Next 50, Mid Cap, Bank, Financial. So there's a new one that has come in very recently. So what we can do is we'll go to the derivatives part, and under the derivatives, let's see futures. So if you see under futures, we have the Nifty 50 futures. So this is the futures for the Nifty 50. For the other indexes like the bank and the financial, there is also something that's listed, and there is also futures for stocks. Okay, so let's choose Nifty 50 futures, and here we have three entries. So what does all of this mean, right? So we have an index future for Nifty, and expiry date is 29th July 2021. Similarly, we have one for August and one for September. So always in the futures, right? So we are trading this month, actively trading this month, the next month, and the month after. So there are three months that we are currently looking at, right? So and what is 29th, and why does it end on 29th, and why here on 26th, and why here on 30th? That's because expiry date is generally the last Thursday of the month. So 29th July is going to be a Thursday mostly, right? And in the worst case, or if there is a holiday, for example, on the Thursday, then the day previous, the previous trading day, right, which could be a Wednesday, or also could be a Tuesday, right, would become the expiry date. So in futures, right, we are actually talking about the value of the underlying. So the underlying here is Nifty on a particular date. So in this case, the particular date is 29th July. So you can see here, so the last trading price is 15,845, right? 15,845. So let's see what was the actual Nifty's value, right? Underlying value. So if you see here, Nifty today, right, is at 15,856, but the last price is 15,845. So somebody, right, a buyer as well as a seller, thinks on 29th of July, so the price would be 15,845. So if you're really a buyer of the index future, what do you expect? If I would buy 15,845, I would expect that if I have to make money, then on 29th July 2021, I should be trading at least a point above 15,845. So even if I trade, or the Nifty closes at 15,846, I will make one, right? One unit. And the lot size here is 50. So I can say, okay, leaving aside commissions and taxes, everything, I can make 50 into 1 is equal to 50 rupees, right? Provided on 29th July I trade beyond this. So that's the buyer's thought. What about the seller's thought, right? So he will actually make money if Nifty closes anything below 15,845. Okay, so in fact this month, because we are very close to the expiry date, right, so we are actually trading at a discount, right? So the spot is at a premium at 856, which is bigger, and the futures is actually at 845. So right, so people think maybe it is actually going to close a little lower than what it is currently trading at. Okay, but let's look at the next month, which is like 26th August, right? So here 15,888. So the spot is the value of as of today, and the spot is not changing. So spot Nifty today is 15,856, but 15,808. So this means, um, in one way, this is slightly a bullish view, right? So people, if there's somebody who is really ready to buy at 15,888, that means for that person to actually make money, I mean, anytime between 26th August, right? He can close his position as well, not necessarily wait until 26th August, but it has to trade about 15,888 for a certain period of time where he can really exit and make some profit. So somebody is really willing to pay the extra premium, which is almost, I would say, 32 points, right? 32, that's actually 32 into 50, right? So 32 into 50 is around 1,500. So they're willing to pay this extra premium of 1,500 because they still think there is a scope of making some money, right, before the expiry date, where he can actually make some profit and close his position. And because there is some time value, that's why there is a premium. Similarly, for 30th September 2021, you can see this much more higher, right? 15,932 from the spot, that's almost 75 points away. So people are ready to buy this at 15,932. Really, there should be at least one opportunity before 30th September where this is trading higher to actually make money, but it's possible. So this is index futures, so where we are saying that we are buying into the index itself on a particular lot size, and this has an expiry date, and we try to say that we are going to make some money either by buying or selling before this expiry date by taking a position here, right? Okay, so just like index futures, right? So these are also index futures. The Nifty Bank is an index, Nifty Financials is an index. There's also a possibility that you can also do this for stocks. So if I click on stock futures, you can see some of the popular symbols, right? So this Airtel, ICICI Bank, Reliance, State Bank. They also have similar expiry dates, and in the stock case also the story is almost the same. So so we are expecting Bharti Airtel, for example, which is currently the future is trading at 546.30, and the real value, the stock price is trading at 546.80. So with still a slight discount from the underlying. So if somebody has to really make money, right, so they expect, the buyer would expect that he actually gets uh, a price which is greater than this before the 29th July, which is the expiry date. Okay, so that's a very brief introduction to futures in this episode. Thank you.